Hey guys, welcome to the Bitcoin Fortress podcast, recorded here on September 28th, 2025. This is episode 183, recording this week at block height 916801, Moscow time 907. Transaction fees are 1, 1, and 1. In this episode, we'll lead with a major corporate Bitcoin acquisition, talk about minor pivots into AI, liquidations, and macro surprises, a Deutsche Bank central bank Bitcoin report, a controversy around a proposed censorship fork debate by Luke Dasher, UK digital ID proposals, ETF demand versus minor issuance, and more. Then we'll wrap with what Bitcoin only podcasts we're talking about this week. So, with that, let's jump right in. First item up here, Strive acquires Semler, 5,816 Bitcoin added to the treasury. So the Strive Semler all stock deal will inject 5,816 Bitcoin worth about $675 million into Strive's balance sheet. I think it's a stock for stock deal. Future Bitcoin purchases will be funded via preferred equity, not debt. So they're taking a page from the Sailor playbook. You gotta love preferred equity because you never have to pay it back. Just pay the dividend. But that would keep their balance sheet cleaner. The implication, of course, for this is that corporate treasuries are going to continue embedding Bitcoin into capital structure decisions. Next item, IREN does a pivot, doubling their GPU count, and their stock went up 8%. So despite broader crypto weakness, IREN stock went up 8.4% after announcing an expansion of AI cloud using 12,400 GPUs. They are now projecting 500 million plus of AI revenue by Q1 2026. And of course, that pivot may be critical for miner survival under compression. So, a lot of competition, extremely high hash rate. Bitcoin's price has been somewhat muted, so that puts a lot of pressure on mining profitability. A lot of the miners seem to be wanting to diversify into AI. But of course, that's quite a different business. Bitcoin, you can just shut it down if you need to because of the power grid, but AI needs to be up 24/7. But anyway, it looks like the stock market likes the diversification play. So if you're into mining stocks, there's your news. Next up, 1.5 billion plus in crypto liquidations after a sharp dip. This was, of course, earlier in the week. A wave of forced liquidations across leverage longs as Bitcoin dipped 2 to 3%. Ouch. The cascade underscores the fragility in leverage structures. Tight risk management is needed. And of course, for those of us who just stay humble and stack sats, we merely watch with amusement as people get wrecked, whether they're short or long. Leverage is not good. Next up, Bitcoin dips below 111,000 on a growth surprise. That's not a growth in the U.S. economy, that is. Revised U.S. GDP dampened rate cut hopes, and Bitcoin fell under 111,000 as a result. However, you will notice that the shitcoins sold off even more, which reinforces the relative strength narrative. And again, macro surprises are going to continue to dictate short term swings. Now, my own personal opinion is everybody's worried about are they going to print more money and how fast are they going to print more money? And the reality is, yes, they're going to print more money. And yes, they want to keep cutting rates. And yes, they want to do QE. And they're just looking for the excuse. So it may take a little while longer, but it's going to happen. And so just be patient and watch. Crypto market lost $300 billion on the week. Bitcoin down 5%. ETH was down 12%. Total market cap dropped around $300 billion. Leverage and liquidity stress magnified the drawdown. So again, this is pretty typical stuff in the market, and you just have to relax and stay humble and stack sats and watch the market do its thing. ETFs are buying 9 times more than miners produce. Recent flow data puts ETF acquisition at roughly 9x miner issuance, which is pretty incredible if you think about that. That is a lot of demand in excess of incoming supply, which of course is the new coins that are minted every time a block is found. Uh, Basically, a supply squeeze. So then you're asking yourself, well, why hasn't it shown up in the price yet? Well, that's a very good question. And nobody really knows the answer. And if somebody thinks they know the answer, then they're probably lying. However, this dynamic does help justify upward pressure even in weak sentiment periods. And so, therefore, the structural demand and supply imbalance is there, but you're going to have short-term volatility that's going to go in an apparent opposite direction of where everything should go. And again, that's why you don't use leverage and you are just staying humble. SEC eases listing rules for commodity crypto ETFs. The SEC approved new generic listing standards for commodity ETFs, smoothing the pathway for new spot crypto ETF issuances. This could open the floodgates for broader ETF issuance in Q4. We'll have to see. Obviously, the Bitcoin ETFs are already out of the gates. I think there's some maybe some Ethereum ones, but of course, all the other shitcoins are waiting in the wings. So. Hashdex Nasdaq Crypto ETF approved. The SEC greenlit Hashdex Nasdaq ETF, which holds a basket of assets. So it's got, I guess, Bitcoin, Ethereum, Ripple, Solana, and XLM. This, of course, signals continued institutional confidence in multi-asset crypto inclusion. But of course, we know there is no second best, and so you should probably buy Bitcoin. And of course, with the recent fade of Bitcoin's price, people are once again worried about Red September. Red September fears again, folks. Uh-oh. After early gains, Bitcoin is now turning red for the month. Oh no. Historically weak month. And this pullback aligns with seasonal caution, of course. So what happens after Red September? Well, October. So, of course, the next piece is October rally is possible despite current weakness. Analysts point to historical strength in October and suggest Bitcoin may bounce from the $109,000 range. Also cited $1.7 billion in long liquidations during September's drop. So, of course, that'll clear out all the speculators, and then everybody will reset their positions and hope they can gamble a little more and be successful the next time. But We're transitioning from red September to October. And again, we just watch and smile. And if the price dips, we get to buy some more cheap sats. So nothing wrong with that. Next up, Cipher is considered undervalued per DCF analyst models. A DCF valuation claims Cipher is undervalued by 63% as of September 2025. However, there is high variance and risk remains. Their mining margins, power costs, macro noise all come into play. And of course, just because something's cheap doesn't mean it's good. So if you're into buying miners, buyer beware. The UK is going to start allowing retail access to crypto ETPs starting on October 8th. UK retail investors will gain access to UK listed crypto ETPs after the FCA, I guess it's the Financial Conduct Authority or something like that, lifts their ban. This could bring new retail capital, especially in regulated jurisdictions. So, uh, most of the news coming out of the UK is authoritarian, dystopian, crushing, um, anti-freedom government interventions. So it's always nice to see at least one thing that's a positive. Next up, mining equities and ETFs are gaining attention. So, ETF commentary notes rising interest in funds tied to mining firms, not just Bitcoin. And so, for those of us looking at this space, it's an additional exposure path, but with added company and operational risk. So, of course, you buy an ETF, the ETF invests in a broad range of uh, mining and AI compute companies. So if you are buying an ETF, probably good to read the list of companies that they have in there to make sure you understand what you are buying. Momentum ETFs, gold, silver, and Bitcoin seem to be leading the flows. So in volatile conditions, capital seems to be favoring high momentum assets like Bitcoin, gold, and silver ETFs. This rotation also emphasizes store value narratives over commodity speculation, although there's a good bit of commodity speculation going on. Uh, and interestingly enough, as well as good as some of these things have done this year, there's still not a lot of retail. There's just seems like it's mostly central banks that are buying the gold and driving the price up. And maybe some institutional investors are getting in the game now. But uh, anyway, a lot of people think there's a lot more upside. And that also, I was listening to a podcast last week with Lawrence Lepard, is what Bitcoin did. And he was talking about, he has a very interesting chart that shows the price history of gold mapped against Bitcoin, obviously on different scales. They're on different scales, but the relative moves. And it's pretty amazing. But over time, gold almost always leads Bitcoin. So gold will move first, whether it's up or down, and then Bitcoin will tend to follow. So his thesis is gold's had a pretty good run here recently. Bitcoin's probably going to follow, and that would tend to map with the fourth quarter being usually a pretty good time for Bitcoin, all things being equal, and then also the October thought. So we'll just be watching. Warsaw launches Europe's new Bitcoin ETF. So the Warsaw Stock Exchange rolled out its first Bitcoin ETF, signaling crypto regulation acceptance in EU markets. So, congratulations to those of you in Poland. I'm sure I have some listeners there. Global capital flow potential is rising beyond US borders. So, we just talked about the UK green lighting ETPs and now Warsaw. So, again, game theory continues to play out. Bitcoin and alts tumble in daily sell-off. So this was later in the week. Barron's noted that Bitcoin was down 1.9% and 7-day losses were 5.8%. So, the mainstream media just loves talking about the price. And of course, the price is important. It is certainly the most visible indicator of whether or not Bitcoin is doing good or bad, unfortunately, which is why you have to sort of tune that out sometimes and just think about, do I have more Bitcoin now than I did at the beginning of the year? And if the answer to that question is yes, then you've met your stacking goals, or if you've met your stacking goals and you have more than you started the year with, then you are doing well. Coming back to this, the broader market seems to exacerbate pressure. And so correlation with equities is increasing. And there was something else I read recently that said that the Bitcoin correlation with NASDAQ is now um, increasing. So that's, not a good thing because, it's supposed to be diversification and it's not correlated and yada, yada, yada. And, well, you know, I guess mainstream financial types have to talk about something, so I guess they'll talk about those things. The macro narrative and one big reason to buy Bitcoin before year end. So here, and by the way, I'll put links to all the show notes or to all the articles I'm covering here in the show notes so you can read it for yourself, as always. But this editorial argues that rate cuts plus sovereign accumulation could push Bitcoin higher in late 2025. Well, we're pretty much expecting that, but we've been wrong before. And of course, it says use this with caution, but it does fit many long-term theses. So we'll see. We'll see if what happens here in the next few months. And of course, we are still in a cycle, a 4-year cycle, and everybody's also trying to predict when the cycle top will be, and then will it be a blow off top, and then Bitcoin drops, I don't know, 50% or 80% or whatever. And you sort of need to be prepared for that situation yourself. But you can't time the market. You just can't. So again, and is the 4-year cycle dead or is it still alive? Is it going to be a longer cycle because we have less volatility now? There's just a lot of questions out there, and it's really hard to tell for sure whether or not and where the price is going to go. As I like to say all the time, Bitcoin does what Bitcoin wants to do. And so every dip is a gift, and when it goes up, you just sit back and be happy. And when it goes down, you feel poor and you want to not go out to eat. Next up, the U.S. Strategic Bitcoin Reserve. So again, this concept is discussed in official circles. Government Bitcoin holdings, current holdings, are being held as reserves, so they're not selling. Obviously, all the Bitcoin they've stolen from criminals, which is how they built their reserve. But while this isn't really fresh news, it does form a backdrop for reserve conversations. And of course, many people are waiting to see what actually happens with that. Are they going to grow it or not with additional acquisitions? Texas state law or Texas State Reserve law, SB 21, allows Texas to hold Bitcoin reserves. The bill is active, and we are watching that to see how much Bitcoin is Texas going to stack. There's a new wave of ETFs expected in Q4 with the SEC listing rule changes. Q4 may bring many new spot crypto ETF launches. Again, we talked about that earlier. Probably more of these multi-coin things, which the market seems to like, and probably some new ones for some of the other shitcoins so they can all get in the game. But again, the Bitcoin ETFs seem to be doing the best so far. September pullback resets sentiment. So the early month gains in September largely eroded away. So Bitcoin's closer to flatlining for the month. So there's still a couple days left. So we'll see where we close out September. But uh, sentiment seems to be relatively bearish, which is surprising since there's so many reasons to not be bearish, to be bullish. Gold and safe assets see relative inflows. So some analysis is showing that capital's rotating into gold and silver over crypto during down weeks. And of course, we've seen that the last few weeks. Gold and silver just keep going up, 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 which is really surprising considering, the stock market's also been kind of still trading around all-time highs. Those are usually go in the opposite direction. People don't buy gold when they're buying stocks, but that would seem to indicate that something's maybe not quite right out there. A lot of people calling, there's going to be a big sell-off in the stock market. Everything's going to collapse. I'm sure eventually there will be a correction of some sort, but what do? You put all your money in cash? You know, that would probably be the worst thing you could do, because your cash is a melting ice cube. The actual rate of debasement is probably, I don't know, 10, 12, 15% a year. So if you like losing your purchasing power that fast, then go for it. Put it in cash. But otherwise, maybe a Bitcoin treasury makes sense, or at least buy some stocks or gold or something, you know. But I would keep the cash to a bare minimum. Next up, institutional correlation rising. New research suggests Bitcoin's correlation to Nasdaq and S&P is increasing with institutional presence. We talked about this earlier. This is kind of interesting. Not sure I really care, although it does affect the narrative because Bitcoin's supposed to be uncorrelated. And there are certainly periods of time where everything else is going down and Bitcoin is going up. So it obviously says that Bitcoin is maybe correlated during some periods of time to other assets and uncorrelated at other times, which is another way of saying Bitcoin does what it wants to do. And good luck in trying to predict the price action. Next up, quantum extreme latency protocol thinking. Bitcoin as interplanetary money. A new paper on proof of transit timestamping for extreme latency environments, such as interplanetary networks, shows how the chain might adapt in frontier contexts. So this sounds pretty interesting. Again, link in the show notes to that article if you want to dive down that rabbit hole. But Bitcoin could be interplanetary money. How about that? The mining ETFs are picking up some narrative steam as the miners reposition. ETF wrappers for mining firms are getting some narrative capital. So again, miners repositioning from being Bitcoin only to providing some compute for AI, and then ETFs then wrapping a bunch of those types of companies together for sale in our over financialized system to investors. This is an interesting one. Deutsche Bank says that central banks are likely to adopt Bitcoin alongside gold by 2030. So Deutsche Bank argues that Bitcoin will join gold as reserve assets, citing falling volatility, improved infrastructure, and demand. They see Bitcoin as a complement, not a replacement to gold. If central banks adopt in a meaningful way, it would tighten free float and reshape the supply curve, and obviously number go up as a result of that. But kind of an interesting, major institution coming out with this study report, and that was, you know, pretty interesting news this past week. Luke Dasher, censorship fork proposal debated. So reports that Dasher considered a hard fork using zero knowledge proofs to purge illegal content, CSAM, triggered quite an uproar last week. He then later denied any hard fork intent, calling it misreporting and stressing filter versus protocol changes. So filter meaning like what the nodes are going to handle or not handle, which of course he has Bitcoin knots, and then there's Bitcoin Core, and he's got filters on his uh, Core doesn't, and he's trying to fight spam. But at the end of the day, the miners are going to mine what they're going to mine based on the protocol. So unless you change the protocol, you don't really change the network. Uh, that's a very oversimplified explanation. The community is sharply divided, however. Censorship purists see this as betraying Bitcoin's core values. Others cite legal risk. Of course, if you're carrying illegal stuff as a node operator uh, in your node, then that puts you at legal risk. But again, there's something like 23,000 nodes around the world that are currently reachable last time I looked. And good luck. Good luck in enforcing that, Unfortunately, freedom of speech comes with you have to deal with speech that you don't like, you know. The episode highlights governance fault lines, though, and so there's quite a robust debate in the community about this, and we'll see where it goes. But we've had hard forks before, the block size wars, and the end result of that was Bitcoin became stronger, and that's where everybody gravitated to, and the other protocols just kind of languished. And so, as long as the community is down with the fundamental values of Bitcoin, it's probably unlikely that something like this is going to hurt the protocol. But it's certainly gotten a lot of people's attention recently. So, next up, UK digital ID plan rollout and backlash. So the UK government announced a new digital ID scheme, which is intended for right to work checks, potentially mandatory in this parliament. Critics warn of privacy risks, creating a high-value hacking target. Of course, honeypot for the hackers. And a petition with 1.6 million plus signatures is currently circulating. Bitcoiners definitely see parallels in this: identity mandates, debanking risk, and erosion of the ability to be pseudonymous. Uh, Certainly impacted by digital IDs. It's also a theory that maybe this is they're trying to front run, the digital coin, the stable coins, the U.S. stable coins, because those will be proliferating, and people may want to gravitate towards that. And so, how do you stop your citizens from um, moving their money into this? Well, a digital ID would be great, because then they can say, you have bought too much US dollar coin this week, and so your account is frozen. You bought too much steak this week. You need to eat chicken or have some bugs. So, anyway, very disturbing, dystopian, and lots of countries seem to want to go down this path. The EU is talking about it as well. Um, it's a good thing to keep an eye on. As we said earlier, next item, Bitcoin holds up better than the alts in the current drawdown. The alts, ETH, Solana, Doge have dropped more sharply in this latest correction in September. Bitcoin support zones are holding relatively better. So again, hopefully we can look forward to October and say goodbye to Red September. Wrapping up, Bitcoin has been sort of bouncing around in the 109 to 111 range, very volatile. Some of the key risks and catalysts to keep an eye on include ETF flows, minor issuance, macro data surprises, sequestration proposal, and governance forks. Of course, I don't think there's anything seriously on the horizon there, but always good to watch, and also to critically evaluate, is this really a concern or is it FUD? Because a lot of times it's just FUD. And also watch for sharp difficulty adjustments, policy shifts, and other narrative swings. All right, that wraps up the news. Let's get into the podcast themes and wrap for the week. So, we went through and looked at all the Bitcoin only podcasts this week, what Bitcoin did, coin stories, rabbit hole recap, etc., and to see what everyone's talking about. And a few themes popped up. One, of course, is macro rate path. So the rate cut is done. The Fed cut 25 basis points. Now the market is watching whether it holds versus inflation. Are they going to continue cutting? How low are they going to go? Et cetera, et cetera. So a lot of people are talking about that because, of course, liquidity is a big driver of Bitcoin price. The more liquidity, the higher the price goes. Liquidity equals money printing, I guess, in my mind. Second theme, demand over issuance. ETFs versus minor supply remains the structural trade. So a lot of chatter about that. Protocol and governance tensions. So the Dasher censorship debate was on the menu. Filter proposals, forks, all sort of bubbling up into the mainstream conversation. Some of this is even causing some people to be a little concerned. Especially if you're not very technical, is this really something to worry about? And there's, of course, opinions on both sides of that as well. But again, unless they're going to fork the protocol, and if they do, I know where my vote is going to go for my node. It's going to go to good old-fashioned Bitcoin. Privacy and identity risk was also on the menu. the UK digital ID proposal, Vietnam digital ID, which then resulted in the closure of a lot of bank accounts. This ties directly into Bitcoin's ethos of about being uncensorable and outside of the authority of the banking system and the government. You don't need to ask permission to use Bitcoin. You can just use it. All right. So that's a wrap for episode 183. Thanks for listening, your support, reviews, and community presence. This week's featured post on the Bitcoin Fortress Substack is why people of faith are often early adopters of Bitcoin. So check that out. Link in the show notes. Don't forget my 3 books that are out. You'll find links to those in the show notes as well. Had a lot of fun writing those. And one's sort of a beginner's book. The second one's on retirement and estate planning. And then the third one is called The Bitcoin Lifestyle. So their last two are kind of complementary books. Next week's agenda, we'll just follow the news flow and see where it goes, whether we have protocol updates, global reserve moves, regulation, or governance updates. We shall see. So until then, stay sharp, stack sats, and stay in the fortress. Bye bye.